Hey guys, welcome back. Today we are going to see Spetty shares problem from corporate accounting, and this is one of the very small concept which is there in chapter one of corporate accounting, and there might be we might have some confusion between the Spetty shares and the ESOP. So first I will try to explain the Spetty shares and the difference between the equity employee stock option plan, which is the rights given to employees, no. So what's the major difference between this split equity shares and employee stock option plan is split equity shares are issued for their contribution done by the employee or directors or expertise of employees or director and intellectual property. This is the uh, creations of employees or directors. Okay, any creations or employees that has to be protected from the unauthorized use of people. That's for that creation, we are if we are paying any shares to the directors or employees, that can be called as strategic shares. For example, uh, if Cipla is a company, Cipla is a medical manufacturing company. During the time of COVID, if any employee has been came up with the idea of curing the COVID vaccine for that COVID-19 virus, so that for that for to that employee, the company can issue this petty equity share to preserve the right of that vaccine formula. So for this purpose, petty equity shares can be issued. And for ESOP is like rights given to the employees to motivate the employees to work for the organization, devote more time to the organization. So this is the only difference, and we'll discuss about ESOP in next video or upcoming videos. Today we'll try to finish off this sweaty shares. What if sweaty shares are given for consideration and without consideration? Okay, right. If it is given for consideration, we'll be receiving some amount from them, right? So that will be called as bank account debit. And then for the creation, what they have done, which is for the creation or the expertise or the contribution, we are calling it as the intellectual property account debit to equity shares we are issuing to them, right? So this is the entry for consideration. What about without consideration? Without consideration is very easier, though there is no bank account, because we are not receiving any single penny from the employee. So directly we are debiting the entire amount to intellectual property, and then we are issuing the equity share capital to the particular employee, right guys? So that's it. Let's get into the problem. Okay, Tinku Limited allotted 50 Spiti shares of rupees 100 each to its directors at this discount of 6%. Okay, then the 6% discount, right? This 6% discount is the intellectual property expense for the company from the company side. So what would be the entry for this first transactions? Okay, company has issued 50 Spiti shares, right? 500 into 100 rupees 100, which is shares worth 50,000 into 6 percentage, which is 1 minute, which is 3,000 rupees. So 3,000 is the discount amount for the employee. So this is the IP account for the from the company's perspective. Okay, so what amount we are receiving from out of this 50 equity shares, which is 97 percentage, sorry, 94 percentage we are receiving, and IP account we are bearing 6 percentage. So to equity share capital we are issuing to the employee. So 50,000 worth equity shares has been transferred, and then 47,000 has been paid by the employee, and then 3,000 has been borne by the company. So first entry over, and then the next entry, which is sweet equity shares of rupees 100 allotted to employees at par in consideration. Okay, entire at par in consideration for technical. Company has given the shares for the technical know-how. Technical know-how is another name for patent only. So we can assume it as a patent only. So how, what could be the entry? So 800 shares, right? 800 shares into rupees 100, rupees 80,000 worth shares has been given for the intellectual property, which is 80,000 to equity share capital account, which is 80,000. Okay, that's it. So we are not receiving any consideration from this employee. We are fully issuing the 80,000 worth shares for the technical know-how of that particular employee. So this is the simple concept. We can expect these kind of questions from your MCQ perspective, even though it's similar. Sometimes you might feel like forgetting this concept and also that's why I prepared and uploaded a video separately. So thanks. Tomorrow we'll see some other concept from some new subject or similar subjects. Okay, thanks.